How to exit and manage your trades profitably. So guys, I do think this topic is very much slept on. A lot of people talk about entries, strategies, how to predict the market, which again is all good stuff, good information, and will definitely help you. But if you have all this information but you don't know how to exit your trades, it's pretty much useless. No one's ever made money from a good entry. No one's ever made money from a good entry. Money is made or lost on your exits. You can have a great entry and price could rally in your favor 1,000 pips, but if you only exit when price eventually comes back to your entry and you exit at break even, well then what was the point of the good entry in the first place? And likewise, if you get a good entry but you exit the trade immediately, so once you're in a little bit of profit, you're out the trade, or even a little bit of loss, you're out the trade. Again, what was the point of having the good entry if your exits are mistimed as well? So you need to be focusing on your exits just as much as your entries, potentially even more as well, because like I said, no one's made money off a good entry. Exits is where you walk away with your profit and loss. It will decide whether it is a profit or loss or how big the profit and loss is. So let's get into it. Let's talk about exits. Let's talk about managing your positions, which are very much important. So I'm very much a big fan of actively managing your positions. You can have a target, you can have an area which you're expecting price to get to, but I highly do recommend having some type of management plan. Doesn't have to be complex, doesn't have to be insane, just some type of mechanism, some type of protocol whilst that position is live to minimize your losses and maximize your wins. So on average, when you walk away, no matter really what your win rate is, the sum of your wins is outweighing the sum of your losses, which again is basically what profitability is. So let's say hypothetically you've got a trade, you've got an entry here, your stop loss is here, and let's say your target for the trade is up here, which is looking like a pretty good risk to reward. Let's say price has come to your entry, you hopped in, and now you're live. Now, my thought process with this position, with trades in general, is always, okay, I'm expecting price to get to A to B. From my entry to my take profit, of course, you could look at the stop loss as C. If price gets there, I walk away for loss. But I'm expecting price to, of course, get to my target, which is why I took the trade in the first place. So let's say I'm in the trade. If things go well and I'm seeing momentum in my favor, and I'm seeing higher highs and higher lows, of course, hypothetically, this is a buy position, then there's no reason for me to do anything. You know, price is trending in my favor, I'm seeing structure in my favor, I'm assuming as price continues, we will eventually hit my target. If this is the case, I'll just be looking at trail stops underneath lows, which of course will allow me to minimize potentially my drawdown if price was to turn around, but also make sure that I do walk away with a profit from that trade because I've done the hard work, get to the entry, catching the move. How price moves and how far price moves will be up to the market itself. But I'm now looking to see if I can get an entry on that area. So let's say you catch the rally, price hits your target, you walk away. But let's say in a different situation, you find a similar entry with a stop loss in that area there as well. And price does rally, of course, let's have our target in. Let's say price does rally in your favor, but maybe it starts to consolidate and then maybe potentially breaks the downside. Now, do you still have the same hope, hope's the wrong word, same expectation that price will get to your take profit as you did with this example? Of course, let's say we're in a similar situation. So let's say price has rallied to a certain, a similar area. So we haven't gone as far. Would you still have the same hope that price or expectation that price will get to that level as with this situation? Probably not. Again, everything is probabilities. Maybe price does potentially bottom and go and hit your target. That could happen as well. But I would be a lot more confident in this position that price is going to hit my target or at least go closer towards my target and walk away with more of a profit than this position. So I'm going to manage them differently. You could either potentially exit the trade altogether and wait for a re-entry to get back in, or you could maybe move stops to break even, or you can take some partials, close 50%, leave another 50 to potentially capitalize on the move should it take place and reach your targets eventually. But you would manage it differently. You wouldn't have the same expectation. You wouldn't approach the trade in a similar way if this is the situation versus this situation. So you want to treat them differently because again, like I said, trading is all about maximizing your profits and minimizing your losses. In this case, you want to maximize. You want to allow room for the market to fluctuate. You don't want it to break structure because of course that would insinuate that maybe price isn't going to hit your take profit. In that case, you probably want to again exit that trade, take partials, trade your stop further to protect your losses. And of course, if price is going to continuously make higher lows, you want to stay in and do nothing, let price hit your targets. So your exits are going to be very, very important, because when you do take a trade, the only information you have is everything up to when you take a position. Let's say if you get into the trade here, all the information you have is what price has previously done to your left. Everything price will do whilst you're in the trade is new information and will provide you new insights of what the market's likely going to do in the following candle, and the one after that, and so on and so forth. Maybe price is more likely to go and hit your target as momentum picks up and as structure continues in your favor, or maybe that's not the case. Maybe you need to exit the trade very quickly. And this comes with, and this leads me on to talking about closing trades early for exits, closing trades early for losses. Let's say you do hop into a position, price does see a nice reaction, but it starts to continue lower. Well, if this is the case and price is creating structure against you, it's probably a good idea to exit the trade. Because again, do you still have the same expectation that price is going to hit your target as you did when you hopped into the trade versus when price is creating structure against your trade? Probably not the same. If that's the case, again, you can hold the position. Maybe according to your strategy, that is still the case. But I know for myself, if I'm seeing structure continue against me, that's a sign to get out of the trade. I can always re-enter. Price is in a similar location to my entry anyway. If price starts to show signs that it's about to continue in my original expected direction, I can always enter later on. I'd rather close for a smaller loss and look for a re-entry rather than take the loss and then find a re-entry or just be wrong altogether. That way I can keep my losses small and still have the possibility to get back into the winning trade if that's what's going to be the situation. So again, let's say you get into another trading, price starts to consolidate at your entry. Consolidation is not the worst thing in the world. Price is just in equilibrium. It could break in your favor, could break against you. But again, you're going to keep an eye on that. If price does break in your favor, great, stay in the trade. Price may potentially go and hit your targets. If price, of course, does break against you, that's a sign to potentially get out of the position and look for re-entries when momentum is back in your favor. I want to go through a few examples of some trades I've taken recently, kind of showcasing this understanding in the live markets. One trade I want to go through is AUDCHF, a long position I had a few weeks ago, which would have been a losing trade, and it was a losing trade, but would have been a full loss, but I did manage to exit the trade early because I was getting some signs that price wasn't going to continue my favor. And again, this goes back to entries, not necessarily the most important thing. They are important, yes, you want to perfect your entries, but perfect your exits as well, because that will tell you how much your profits and losses will be, and whether it will be for a profit or for a loss as well. So I had an entry here, anticipating price to break to the upside. I had some stops underneath the low here. This was a much longer term swing trade. I was looking for a push into the highs here and hopefully a push into this area of supply there as well. Price recently came from all-time lows, so I was expecting a bit of a bullish trend to form. I still am looking for buys, but we're not quite ready yet. But this was the position I had at the time. Now, I took the buy here with the emphasis that price has been consolidating and looks as if we are about to break to the upside and momentum is going to continue higher. So that was the theory behind the trade. So as I entered, price did somewhat head in my favor, but it wasn't really showing much momentum. And we had a key level of resistance, which we broke through, which of course triggered my entry, and price did manage to break back below. So once I saw price trading back below that level, I exited the position and walked away for minus 0.2 R. So again, R being my full risk, about minus 0.2 on the trade. And then eventually you can see price did drop against me and would have hit my full stop loss. Well, in this case, because price did break below structure, that's not a positive sign for my trade. This is new information to me. The information which I got into the trade was over here. All of this, I didn't know that was going to happen. Maybe price rallies in my favor, maybe price melts down. We don't know until it does happen. And as you can see, as price progressed, we got this situation, which doesn't give me the same expectation, the same confidence that price is going to see the rally I was betting on when I hopped into the position. So with that new information, I exited the trade early. And I said to myself, and I said on the stream when I was live, that if price does recover this area and shows momentum again, I'll look to re-enter and partake in the same trade. So there's no loss really at play Not monetary loss, of course I did take a small loss in the position, but there's no like loss of opportunity. You can still get back into the trade at a later date when things look great again. But we got below, and of course that would have been a full loss, but I managed to reduce the risk there, which again helps with drawdown, helps managing losses, and of course will help with profitability as well. Another position I took recently, which again was a losing trade as well, but I managed to get out a little bit sooner to keep the losses smaller. This was actually on the 8-hour chart on USDCHF with a lovely retest of this area. I was again looking for the bounce. So you can go into more strategy and analysis in future videos. This is more just for exits. I took an entry here, expecting price to continue off this zone. My stop loss was underneath the low here, around about there roughly. And I exited the trade after this candle close. In this case, we haven't actually broken structure. We haven't broke below support, but momentum was the key thing I was looking for. And momentum, accompanied with market structure, two things I'm looking at to manage my trades. If momentum is in my favor, I'm staying in. If it's starting to shift against me, I may exit. And if price definitely breaks structure, then I'll definitely look to exit. But in this case, I exited early because the momentum I originally hopped in with this strong candle dissipated, and we're seeing strength in the opposing direction. So I exited here for like a minus 0.75, something like that, 0.7 our loss. So it's like slightly bigger than the small loss on AUDCHF, but still save myself a few extra pips, which can help with profitability as well. And again, simply because the momentum I had was lost, I said to myself, if price was to come back and respect support again, I'll happily look for a re-entry. When conditions improve. That never happened. It would have been a full loss as well. And of course, there will be times where you do get out early and price does turn back against you, and you can take a small loss unnecessarily. You get back in, but in the long run, it will save you a lot of pips because, especially when momentum isn't for you, it's probably going to go and hit your stop loss, and you can find re-entries later on if that's not the case. And in this case, obviously, AUDCHF are trading in at the moment. I hopped into the market there, and you can see, judging by the candlesticks, how consistent the higher highs and higher lows are. In this case, there's no sign for me to do anything. I was looking to try and catch a higher low for hopefully a continuation of this trend, and it looks to be that's the case. It looks like everything is going to plan in this position. So as price creates structure in my favor, higher highs and higher lows, it hasn't been great momentum. So like price has been flying incredibly, although we are picking momentum up now. But we are starting to see some upsides, starting to see some higher highs and higher lows here. And everything was obeying structure, everything was obeying momentum. So no sign for me to do anything. Just like in the example we talked about earlier. In this case, you just want to stay in the trade, let the market do its thing. In terms of actively managing, you just want to stay hands off. Of course, keep alert because something could change. But for now, we're only seeing positive signs. So my initial analysis of price getting back to these highs and potentially breaking through them, I can be confident with that because there's nothing there's nothing there. There's nothing a red flag. There's not a red flag. There's not a new piece of information that tells me otherwise. So therefore, I will stay in that position, and that helps me maximize my winners because the trades that are going to play out, the trades that are going to be the big winners, I will be in the position for it. And the trades where aren't going to quite play out, the trades where are going to go kind of a quarter of the way and then pull back against me, I can get out those trades early. The trades that were just going to hit my stop loss, I can potentially get out those trades early. So keeping those losses small and allowing my winners to run as well. I'll probably do more videos on this topic because, again, this is just kind of brushing the surface. And I want to get into a bit more detail about techniques and really kind of key points to look out for. But this was just a video to show you guys, don't sleep on your exits because, like I said, no one's ever made money off a good entry. It's how you exit will dictate your profit and your loss. So make sure you do focus on your exit, actively manage your positions. If things are progressing well in your favor, stay in the trade. There's no sign to exit. If things are not quite looking good, again, there is an element of discretion. So it's something you have to practice. Some people might exit trade sooner than others for different reasons. But if things are not progressing well, especially breaking structure against you, especially momentum's not looking good and going against you, you can always exit and re-enter and of course still take advantage of the winning trade if it does eventually happen. But I hope you have found this video useful, guys. A lot more content like this coming your way. If you have enjoyed it, drop a like, subscribe to the channel, and I'll see you all in the next one.